Hello guys, so today we will be discussing swing trading strategies. Um, so I'm gonna show a few strategies people use when swing trading and I use myself. So I have a lot of experience with swing trading as I've done it quite a lot, and there's a lot of different strategies to choose from. Um, every strategy suits everyone different, so there's one that suits everyone. It's all about what's finding out what's right for you, which strategy works for you the best. So personally, for me, my favourite is finding bottom plays. So for example, on the screen, you can see 0.30 range is where the stock's bottoming out, and I've drew a trend line, so you can see that. So this is like an area where you'd want to load this, like as soon as it touches that line, like around that area you'd want to load. And then obviously I've drawn another trend line above, and this is where you'd want to be thinking about selling or scaling out. That's one strategy, the bottom strategy. By playing this bottom strategy, you're reducing your risk by entering near the stock's bottom. So if it decides to have any news or catalyst or just gets some hype on the stock and pushes it higher, you've then minimized your risk from swinging early, and then you can sell when everyone else will be trying to get in. So these bottom plays can be really good. You want to look for the bottom of the stop, like as I'm showing on the screen, and that's like a perfect loading zone in my opinion for a bounce when a stock's like bottoming out. Another strategy would be playing a stock for upcoming catalysts or future contracts, earnings, um, and getting in them early, leading up to it, they usually might see a nice move, or especially buyer plays, waiting for clinical trial updates, which can see huge moves usually. Buyers are usually very hot if they have a good outcome. Leading up to the event, you can see them have a nice run up sometimes, and what you will see is a lot of the time they will run up. If you get things like earnings contracts, a lot of the times, as you've seen with MSAI, for example, had a lot of hype around it about earnings in an Amazon contract, which was just all speculation. They obviously ran up all the way to 240, had a massive move, and then you've seen when the earnings come out, it was a sell the news type of play. But you see this a lot with contracts, earnings, any type of catalyst. You can sometimes see a nice big run up before, and that's when you want to be scaling out because a lot of the time you will see a sell the news. But bio plays, especially waiting for clinical trial updates, can be huge, and they have a lot of potential. And you can see upcoming FDA calendar news before it comes out, before the stock releases the news, and it can be very helpful finding a play early before everyone else. So I will look to find some sites for you guys for you to be able to see upcoming FDA calendar news so you can get in early. So another strategy a lot of swing traders use is playing the theme slash trend. Usually some months or weeks you will get a theme in the market, as you saw when BYND ran the other week, the other month. The theme was highly shorted stocks were all running. For example, like Donut, GoPro, they all ran, and they would have been great swings as they all had high short interest. So as GNS is currently running 50% after the big news of them filing a lawsuit, next week you could potentially be looking at highly shorted stocks squeezing, like Open, BYND, GMPX, all stocks with high short interest. And another theme is like when Chinese stocks run, you may notice lots of times in weeks or months that Chinese tickers will start to run. So it's definitely something you want to look out for as a strategy, in my opinion, like the theme of the market, as you can play it to your advantage, and it works very well in my opinion. Another strategy would be looking at the moving average. A lot of people either use the EMA or the MA, which is moving average. I use the moving average when I'm swing trading. So if you look at the chart of stocks, you will see a lot of them will use these levels, the 50-day moving average, the 200-day moving average, as support slash resistance levels. So like a lot of traders will use these levels to take profits or load usually when a stock is above the 200-day moving average. it's usually classed as bullish, and when it falls below that, it's classed as bearish. So you also want to look at the 5 to 9 day moving average as well with that to see if there is momentum in the stock going up. And so if you've got the 200-day moving average and a stock's getting close to that, sometimes it can reject it, so it'll fall back down. But obviously, the more times it tests that 200-day moving average, it has a more of a chance of breaking down the walls and getting above it. And as soon as that stock gets above it, it's classed as bullish because it's above its 200-day moving average. Um, Obviously, if you can see a 50-day moving average cross a 200-day moving average as well, this is like classed as a golden cross, which is another bullish indicator. Obviously, nothing is a guarantee, but you want to be using all these technical indicators to your advantage. So if you're swing trading, a big one is the 200-day moving average to look at, and also the 50-day moving average. These are definitely ones you want to be using for resistance and support levels. So yeah, I know it may seem simple, but a lot of people do overcomplicate things. You want to be using all these things I've mentioned in this video to your advantage, all the technical and indicators, the moving averages, the volume, the RSI levels. If a stock is, for example, their RSI level is over 70, it's usually classed as overbought. So that indicates a good entry to sell or scale out. And if a stock is obviously below 30 RSI, it's classed as oversold. So it's a possible buy entry because as it could have a dead cat bounce, which is basically when a stock just bounces just because it's so low and oversold. So that's definitely you definitely want to be watching all these indicators and technical signals. They can all play a massive advantage when swing trading. Obviously, when I'm swing trading, I like to use the 4-hour chart as well and the daily chart as I track more long term. As when I'm day trading, I usually only use the 1 to 5 minute chart. So these are definitely things you want to be using and looking at all to your advantage. And I hope you guys found this video helpful. Thank you for watching. Peace out.